what do you make of all this, and what is the takeaway?
Yeah, well, we always knew it was going to be a very close call, Rish, especially for Singapore, but for all central banks right now. We were looking at a survey that going into this saying 10 of 22 respondents are looking for a maintenance of the 3 policy settings, which is what they ended up with. The other 12 looking for various forms of tightening. Very close call here, but after those GDP numbers that surprised to the downside, you can see why Singapore is now pushing more of the growth focus rather than the inflation focus here. So they're talking about the dimming outlook, the pressures from manufacturing, from production, from advanced economies slowing down, declining investment from financial conditions tightening, all these factors weighing on this open city state and really contributing to their very dim outlook this morning.
Well, give us a sense of what it means for the currency.
Well, you saw the currency slid a little bit after the report. There was an expectation of tightening this week just because there was a lot of commentary from MAS officials over the past month, but leading into this decision this morning that kind of seemed to indicate that they needed a little bit more firepower to do a little bit more tightening before they could end that tightening cycle. Now, remember, they only have 2 scheduled decisions per year, April and October. So now this leaves investors wondering, will they have to perhaps tighten again or come back in and readjust policy settings sometime in July, which is what they did last year, do a January and July decision.
But it's their global view as well, which is key here, isn't it, really, ultimately?
Very key for a trade-reliant city-state like Singapore. They're constantly putting those external factors in the forefront. They said in tandem, Singapore's outlook and the global economic outlook are dimming. They're looking pretty bad through the end of the year. And they did, kind of sound the tone of the IMF and World Bank out of Washington this week, where a lot of officials are talking about mounting growth risks, especially out of financial turmoil, possibility of credit conditions tightening. So they did cite that. They mentioned the global growth outlooks remains uncertain.
Yeah, I want to get also, that's the uncertainty.
Yes.
It's always an uncertainty, let's face
absolutely.
it. But,
right.
you look at what happened in the US with the PPI read last night, of course, and then you look at what they're seeing in terms of inflation, and they're seeing certainly a little bit of a downdraft and a more benign picture.
It's right to point out the inflation, the language around inflation changing as well. They didn't change their inflation forecast for the year, but they did kind of lay out a timeline where you do see medium-term more price increases, but ebbing throughout the year and more toward the end of the year, and finishing, as they say, ending the year significantly lower on the core inflation, which is a big relief to people if it bears out, because we're still at 14-year highs here in Singapore. We see it in rents, we see it in services and other
rents
places.
Particularly,
so, yes, so those should slide, and that helps contribute to MAS's feeling that they could put tightening on pause.
Yeah, that's what we're looking at.